on, Nick. This is Ruben with the Capital Raiser Show. Welcome. I met you at Jake and Gino's event out in Orlando, the Multifamily Mastery Live version number 3, which was really cool, man. I didn't know who you were. I didn't know a lot of the community. Awesome event. I know that they selected you to be the lender of choice for their entire community, which is very impressive. Can you tell us a little bit about your background and why they selected you out of all the variety of lenders that were available?
Thanks, Ruben. Great to be here. It was great meeting you at the event. And so love to talk about how I came to meet Jake and Gino, get to know them, and why we decided to build our own mortgage brokerage, right? And do that really for the community and beyond. But so simply, I've been in lending since 2003. Of course, everyone remembers the housing boom. So I was working for GMAC Mortgage on the residential side. The party was great. Thought it was never going to end. Thought I was just a really smart guy in his early to mid 20s. And then 2008 came. We shut down the office, and that led to me transitioning to commercial financing. In 2010, I had relocated from Honolulu, Hawaii to San Diego, California. And so just keeping with the beach and the palm trees. And so got into commercial finance and really narrowed it down to multifamily in 2015. Before that, just, a lot of business banking, everything, just working with a lot of businesses more or less, and then shifted into multifamily and just focused on that as a niche ever since. And actually how I met Jake and Gino was through Dylan Marma, who came on as a partner for them last year to help them with their syndications. And Dylan and I had met through the real estate scene in San Diego. We got along, great guy. I didn't know that he had left San Diego and was partnering with Jake and Gino. And, he reached out to me and told me what he was doing. It was very exciting. I had never heard of Jake and Gino at the time. Their niche being in the Southeast, and I was in San Diego. And so he shared a lot about them, what they had done, and how he was helping them scale, and how they had really built a vertically integrated family of companies and were looking to build a loan brokerage for the community. And I thought that was great. He asked if I had any interest in partnering with them on that. And it was perfect timing. I was actually about to launch my own mortgage brokerage in San Diego with a couple of partners. And for anyone who's launched a business or two, that can sometimes things go sideways. And so the two business partners I had lined up started not getting along with each other. And so our whole plan really folded. And so when Dylan called, it was perfect timing. So I spent the better part of last year researching Jake and Gino and their community, went into their private Facebook group, made sure, that the investors they knew and had in their community were actually doing deals, right? And they were killing it. And so kept the conversation going with Jake, Gino, Dylan. They're great guys. They really care about investors that are in their community and who listen to their podcast. And everyone who knows anything about them knows that that's absolutely true. And Gino's got the biggest heart. And I went to the Multifamily Mastery Live event last year in Nashville to really shore things up and really have, a more in-depth conversation. Based on the 2 days I spent with them there, I relocated to Knoxville, Tennessee 3 weeks later, and we launched Rand Capital, our commercial loan brokerage. And so spent about 10 months there building out the brokerage and getting things going. And then I missed the beach. So Gino's here in St. Augustine, Florida, and his partner Jake, and where Dylan is in Knoxville, Tennessee. I said, Gino, I'm coming to the beach, make room. So I've been here for a few months. It's great. My dog is happy to be back at the beach. And that's really the most straightforward, simplest overview of where I come from, how I met Jake and Gino, and how we decided to launch Rand Capital. And that's where we are today.
Cool, man. Actually, I was a lender for Wells Fargo back in 2006 as a Spanish loan originator for all the Spanish loans. So I know a little bit about the inside world of financing. I mean, obviously things have changed drastically since then. And my background is more in the home financing versus commercial financing. But when it comes to launching a brokerage, you're a direct lender, right? You're not a broker.
No, I'm a broker.
You are a broker. Okay. So when you're launching your company, out of curiosity, these are things that I may be interested in. What is the process of starting your own mortgage company? And then what are the differences between starting one specifically for multifamily assets versus other types of, what did you have to do? What was the process like for you?
Sure. So the process can be very scary, right? You're launching into a competitive field, right? In a competitive marketplace. And so what that looks like is, how are we going to fit in and gain market share, right? What is our plan? So our plan was to bring value in other ways that other mortgage brokerages weren't bringing them. And just to compare a broker to a direct lender, it's very simple, right? You come to me and I work with the wholesale side of the direct lenders, right? So I get more effective pricing, right? Just to be honest, than you would get really going direct, because I'm working with the wholesale side and they want to gain my business as well, right? And I do the legwork for you of running term sheets back and forth, right? Getting the different lenders to sharpen their pencils. But I also know which lenders are stronger for certain programs than others, right? And it's just having a finger on the pulse there. So how do we bring more value than the next broker, right? So sure, there's experience, right? Sure, there's knowing which lender to send which deal to. But a couple of things we were very excited about doing and being very transparent about, and we all believe that transparency is what everyone's looking for right now, right? Especially in financial services. And so that would be this, right? It doesn't matter if you're a direct lender for Fannie or Freddie, or you work at Wells Fargo, right? You work for a community bank. The way loans get priced initially is very simple, right? You have your origination fee. And then, as you know from working at Wells Fargo doing home residential, there's a yield spread on the back end, right? So there's essentially, that's commission that's built in for the originator, right? That's not going to show up on a settlement statement, right? And that's what gives you a little room to play with the origination fee if you're getting, beat down by a buyer, or you can, and also it's what lenders will want to provide to me as incentive for me to bring them deals, right? They want me to make more money through them. But what we do with Rand Capital is we reject that yield spread, right? So when we get quotes, which are always presented with the yield spread in there, we reject that. And so what that means is there's a 0.5 point built in, right, to every quote we get. We send it back and say, take out our yield spread, and that reduces the quote, the interest rate for the buyer, or if there's a refinance, the borrower, by 7 to 12 basis points, depending on the term length, approximately, right? So we give up quite a bit of commission there, right, of our earnings to provide, one, transparency to the people we work with, and two, a lower rate, right? So that's one thing. Another thing that we do to provide value is we have a network of investors across the country, right? So we share that, right? So if you are a newer investor and you're needing partners, you need a sponsor for your deal, you need somebody else in that market, as long as the deal makes sense, right? Your underwriting makes sense, the numbers look good, I'm happy to make those introductions to other investors that may be further along on their journey and are looking to put liquidity into a good deal, or just other newer investors that may be, the same financial level as you, and they're looking to partner with you on these deals. There's more of a JV program. So there's a lot of ways that we try to differentiate ourselves to provide more value, because in the end, debt is a commodity, and so you need to stand out.
Yeah, and you don't do it just that way. One of the things that I told you that I needed was help going from our 506B capital raises to a 506C capital raise, and all the marketing and integration of all the systems and tools so that we can effectively grow our business. And you were like, I'm not even going to get anything out of this, but meet Johnny Joe. This is an investor that we actually have a conversation scheduled with tomorrow to help us, because he's already an expert in doing that. And that's one of the great things about you and your community, the Jake and Gino community, and the Rand Partners integration to that community, is that you guys are so willing to go above and beyond what is normally asked of people, and you don't really ever ask to get anything in return. So I love that about you guys. It's one of the most fascinating things I found about that community.
I'd love for us to do business together at some point. I'm always happy to make those introductions. But obviously, when I meet someone like you, I'm happy to introduce you to Johnny Joe. But would hope that we would do business someday.
Yeah, that's really cool. So take us through the process. A person's got a couple of syndications under their belt, or maybe has none, but they join up with a couple of partners and they're taking down their first syndication, right? So maybe they have a background in fixing and flipping and they've scaled up. Now they're going to get a different type of loan for a different type of asset, multifamily asset. So to walk us through this process, we have a deal, we have it underwritten correctly, and we want to get the financing in place while we're also trying to raise the money for it after it's under contract. So we come up to you or to another lender, and what is this process like now? What kind of loan products, what should we expect as a new investor to see from you guys?
Well, first off, I actually work with a lot of newer investors these days that are doing their first syndication. And what I would always recommend is don't do your first deal as a syndication, right? If it's, they're harder than people make them out to be. They're more complicated. I know there's a lot of noise out there. It says, get into multifamily, do syndications, you'll get 5,000 units in 2 years, do it my way, right? They're trying to sell books or programs or what have you, right?
Yeah.
I would always recommend that you just buy a property, even if it's 10 units, if you're getting into multifamily, 10 units, 15, 20, whatever, just get something under your belt so that multifamily is not new to you. Okay, you need that real world experience. Now, I have worked with a lot of people that have a 10, 15, 20 unit, and then they syndicate a 90 unit, right? Or bigger, smaller, 50 unit, what have you, 100 unit. And so what I can share with you is absolutely have some financing lined up. Get a quote before you go into contract, right? And agency debt is the best way to go for a syndication. I do work with private lenders that do syndications, but the agencies are built for them, okay? Now, that being said, get a Fannie or Freddie quote, right, for the property. And when you go into contract, you should have already submitted your application or submit your application to Fannie and Freddie through me within 1 or 2 days after you sign that PSA, right? Because agency debt is a 60-day sprint, right? And you're going to have a 60-day contract with 1, maybe 2 15-day extensions possible, right? So if you wait to get things going with a lender while you're losing time, right, trying to raise money, you're not going to close. You raise the money while you're going through the financing, okay? These are the things you need to know. True net contribution, okay? I'm going to give a very clear example. $5 million purchase price. Let's say you get 80% loan to value, right? $4 million loan. the net worth of the team in the of the key principals, right? The people signing the loan docs needs to be equal to that loan amount. The post-close liquidity of the people signing the loan docs needs to be 10% of that loan amount, okay? Now, you have $1 million equity in there. Forget about the money you're raising for your acquisition fee. Forget about the money for a second of the money you're raising for your CapEx. Forget about the money you're raising to cover your syndication attorney and all of the other fees. Just to focus on the equity piece there of $1 million, that down payment, the true net contribution of the GP, which is the key principals and any other general partner in there, needs to be 10% of that $1 million. Okay, and it's a true net contribution. So, and this is very critical on the small balance deals. Larger deals, you get into conventional, you have a little bit more wiggle room because typically you have a much stronger team and you can maybe get away with a little bit lower true net contribution. On small balance, so that means after acquisition fees are paid, right? Anything like that, that the skin in the game from the general partnership is 10% of that $1 million. So it's $100,000, right? So if you're somebody that doesn't have a lot of money, you're a new investor, you're hungry, you're studying, maybe you got $25,000 in the bank, whatever, right? But you know how to build relationships with brokers, you know how to get deals. What you need to do is bring people into the GP that are going to put money into the deal, right? So you can get an acquisition fee, right? Get paid for all of the hard work that you're doing. You don't have to give everyone in the GP a piece of the acquisition fee, right? You can give it to the people that are signing on the loan, whatever your expectations that you set, but make sure that the GP has 10% of that equity as skin in the game. That's very important, or you will not close.
So what happens for somebody that doesn't have that? So maybe they have a nice relationship with a private equity lender, right? That gives them a bridge loan, but that's a completely different kind of financing. Can you compare and contrast why and in what situations each one works?
So I've certainly closed syndications with bridge lenders, right? And so the situation there is you're going to need to get that loan into permanent debt at some point. The bridge lenders, it's a bridge loan, it's short term, right? 12 months, maybe get 24 months, maybe get an extension there. But the whole point of that is you need to get that into permanent debt. So if you think that you're just going to find, one, you also already need to have money for the down payment and all the same other things, right? But you should not be trying to take down a $5 million purchase price without having your ducks in a row. The reasons you would go into a bridge loan on something like that would be really because the property doesn't qualify for agency debt, but you have a strong game plan to reposition and stabilize that property and the time given for that bridge loan, right? And you should not be trying to do that on your first syndication.
No,
right?
no,
That's a risky deal, and you're risking lots of people's money. So again, and most people who use a bridge loan on a syndication to get into permanent debt are doing deals that are 10, 20, 30, 40, $50 million purchase price. Okay? You're really getting into a scary place if you're trying to use bridge debt on smaller deals because the interest rates are going to be higher, and they're going to be recourse. I mean, there's just so many factors. You don't want to make this harder on yourself than you need to, right? Gain experience with something more straightforward. And really, I just would not recommend on anything that's, $6, $7 million purchase price or below doing a bridge loan as a syndication for your first 2 deals. What I'm willing to do, right? I'm willing to look at your underwriting and take a look at and see where maybe you've missed, right, on expenses. Do you have the taxes in there? Did you call the tax assessor? Hey, man, this looks good. Great job. Whatever it is. I'm happy to give you the feedback on your underwriting. if you want me to underwrite your deals, I'll be happy to do it after the 5th or 6th one we've done together, right? So the people that I've worked with for a long time, right, I'm happy to do that. But if we haven't done a lot of business together, I'm not doing your homework, right?
No, I feel
So
you.
what I always say is, until you have your LOI accepted, let's build the trust. If you want to send me your underwriting to look at, don't tell me the name of the deal, right? Because it's a competitive market out there, and I probably know people in your market. So I would say, until we've done some business together and we do have that trust established, don't tell me the name of the deal till after you get your LOI accepted, because somebody else I know might take down the deal, and then there's always going to be that thought in the back of your head that I sent that deal to somebody else, right? And so I always want to create that trust. And something else I wanted to touch on that is the only other thing I would need to know is beyond your underwriting would be really the MSA, right? Are we in a top market, standard market, small market, or very small market? So I can give you some feedback on the leverage that you're going to get and some other key factors that you might encounter.
So is a lender, specifically when you're getting started, are they really concerned if you're doing syndication that you don't have the money already before they qualify you for the loan? How does that work within your company?
Great question, right? So over the past several years, 90% of acquisitions through Fannie and Freddie have been syndicated deals, okay? They know you don't have the money for the down payment, right? They want to make sure that you have, you're going to be able to cover the true net contribution and the post-close liquidity, right? And so we know from the beginning, hey, yes, this is a syndication. And it's one of those things where if you are syndicating a deal, right, and you're not able to raise the money, that's on you, right? Freddie and Fannie are going to trust that you're going to raise that money, or myself and the lender and Fannie and Freddie are going to trust that you're going to get there, right? Based on the fact that you said it was a syndication, and we're going to verify the key principals bank statements in the process to make sure that we have the post-close liquidity. We're going to create, right, the equity contribution doc that's going to show the lender, right? You're going to create it, not me. It's going to say here, on an Excel spreadsheet, so to speak, right? Google Sheets, whatever you like. You're going to put at the top GP, names of the members of the GP, how much money they're going to put into the deal, LP, list of limited partners, right? All their names, LLCs, what have you. In money committed to going in. Now, everybody knows that people back out at the last minute, right? People send their money in late, right? We get it. No one's going to be asking for the bank account for the property to show the proof of funds there. Everyone's trusting that you're getting it, and also you're typically going to raise, again, not just the down payment, you're also raising your acquisition fee, fees for upfront out-of-pocket expenses, and the true net contribution. So you may end up falling short raising some of that money, but you can always raise it after you close. But what that means is you're not getting your acquisition fee if you didn't raise it, right? That's what goes first. Those are the things, right? But you can't show up at the table without the money. But we all expect that you're going to have it because you say that you will, and we're verifying things along the way.
Interesting. So then tell us more about your relationship with, how about the structure of the hold, how RAND partners and RAND CRE, the integration with Jake and Gino, and how you guys work together?
Sure. So it's the RAND family of companies. All right, and we're vertically integrated. So we're actually while we all work together, right? we're all somewhat interrelated. We're all separate entities. So you have Rand Partners, which is Jake and Gino, Dylan, Mike Taravello, right? That's the investment company, right? That's the company that goes out there and buys properties, right? You've Rand Capital, right? We're the commercial loan brokerage, and we service everyone in the country, right? Also some people outside of the country as well. And we have Jake and Gino, right? Which Wheelbarrow Profits, which is their education company, right? Their community. And Rand Property Management, right? So Rand Property Management manages every property that Rand Partners buys, right? So 1,650 units, whatever it is right now. And I don't think I'm forgetting anybody, but essentially, Rand Capital provides the financing for Rand Partners since we launched, but they're separate entities, and we all are there for the community. But whether members of the community choose to get their financing from Rand Capital or elsewhere is up to them, and whether they choose to invest in any of Rand Partners deals is up to them. So the whole point of Wheelbarrow Profits is to strictly help new or experienced investors scale their portfolio in the safest way.
Yeah, when I was at the event, I thought that it would be a lot of people that were kind of beginners, but what I found was the opposite. There was almost everybody I spoke to had at least done one syndication or at least had a few units under their belt. So I was very surprised at the quality and the caliber of everybody that was there. But that one thing that I had Gino Barber on the show, and I was starstruck to have him. And it wasn't because his portfolio is so amazing. It's because of all of these things that you're talking about, the integration, the family of companies, all these little tools and things that the typical syndication company may not have, that these guys offer and have for themselves, but also offer to their entire community. So I found that to be very powerful within you guys.
And Gino's he's got the biggest heart. You're asking me if I help underwrite deals. No one has the bandwidth to underwrite deals from, thousands of investors across the country. But Gino used to do that. He when they started the podcast years ago, and I couldn't believe this when I found out about this, he would just, on the podcast, he would give out his cell phone number and his email address and say, hey, if you're looking at a deal and you need some help with your underwriting, just shoot it over to me and we'll jump on a call. Now, obviously, there's just too many people that were doing that, and they have a community and so on and so forth. But, Gino's just got, the biggest heart, and that's where I think that's where we separate ourselves from a lot of other communities, because we do really just want to give as much value as we can, and we truly believe that it comes back to us, right? If we just try to go above and beyond with everyone we encounter, it makes life better, right? And two, I'm gonna probably misquote it, but Zig Ziglar, right? Somebody said, I found that by trying to give everyone else in life everything they wanted, I was able to get everything I wanted. I am sure I butchered that, but along that sentiment is, I think, how we all live.
No, I think that mindset part of it is really big. I know Bob Proctor talks about it, even Napoleon Hill. He's like, the quickest and fastest, most efficient way to become successful is to help other people get the things that they want. And, from the Bob Proctor's perspective, he says things like, there's this law of equal compensation, that the more that you provide, the more that it's going to come back to you, because it's a law. He looks at it literally like it's a law, that you can't provide value without receiving it in some form. So from his perspective, and it's a very spiritual perspective, that's what he uses to teach his students how to become successful in whatever it is that they do, regardless of if it's real estate or not. What about your mindset? I mean, tell me, how big do you want to grow your company within the Jake and Gino, or even outside of it? How big do you want to get this mortgage company?
Great question. And so the family of companies, we've actually invested into our own coaching on how to scale, right? Each company, right? And so the goal we have set for ourselves here is $1 billion a year in loans closed for multifamily investors. Like to get beyond that at some point. There is a role model brokerage that I'm not going to say because they're the competition, but who I do admire, and I've met a lot of guys that work at that brokerage, and they're great guys, but we're coming after them. And I saw when they hit that goal that I knew we could hit it too. So that's our BHAG, what you call your big, hairy, audacious goal.
Nice, man. Very cool. So if people want to get a hold of you, what's the best way?
The best way is email me at nick@randcapllc.com. You can also go to our website, which actually, if you want to go to, you mentioned Rand CRE. So to make things simpler, right? Because we have Rand Partners, Rand Cap, Rand Property Management, Wheelbarrow Profits. We did create Rand CRE, so randcre.com. I might be getting a little ahead of schedule here. Hopefully the podcast doesn't come out tomorrow. But if you go there, you can actually find Rand Capital LLC. You'll be able to click on a link, which will send your name, phone number, and email address to me, and I'll reach out to you personally. In the meantime, if you're getting this earlier than randcre.com is published, then randcapllc.com, on the very first page of the website, there's a bar that says click here to start the conversation. But explore the website. There's a lot of great content on there, a lot of educational content regarding different types of lending, a little video with me and Jake, talking about what Rand Cap does. So check that out. I would say follow us. I put a lot of educational videos on Instagram at Rand Cap Lending, and our Facebook page is at Rand Cap LLC. I put a lot of content on there. Maybe not as much as I should, but we're busy, you know.
Well, they're doing a good job at Rand Partners, the podcast with Dylan and whatnot, getting you on there to share a little bit of your market insights. Is there anything that you want to share about the multifamily syndication lending parameters or things that the market is telling you that our audience should know?
Absolutely. So most people were aware that Fannie and Freddie were approaching their lending limits earlier this year, right? And I've tried to be as vocal as possible. They each got $100 billion October 1st. Right? Freddie has dropped their rates over 50 basis points in the past 5-6 weeks. They're getting very aggressive. Not as much in the very small markets and not as much in the small, but if you're in a standard market or a top market, Freddie is trying to eat up everything right now. It's great. Fannie's coming back around. So if you haven't heard, Fannie and Freddie, they got a lot of money. They're looking to use it. So, you know, that's it. No reason to hold back now.
Very cool, man. Well, it's been great having you on the show. I really appreciate it, man. It's great to meet you, Nick. I look forward to doing business with you in the future. You can underwrite all my deals. No, just kidding, dude. No, but it's been fantastic. We have an underwriter, I should say, an acquisitions manager that handles all of that. But yeah, we definitely want to look into. Our model is changing a little bit from shorter term to longer term type stuff, and we're going to be in need of somebody like you. So we'll reach out.
I was here for you, man.
Very cool, man. Well, we appreciate you coming on. And with that, we'll sign off. Thanks again. And I'll make sure that everybody gets your contact information written up on top.
Thanks, Ruben. Appreciate it.